What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with another SNES update. So this is Sensonics Holdings. Before we get started, please make sure to subscribe to the channel and hit the like button so that we can get this information out to as many people who want to learn about the trade, as many as possible. With that said, let's begin. Okay, so we are looking at we're going to start it similarly, but as yesterday. But we're looking at volatility here, you guys, represented by this indicator BBWP. The reason why I'm starting here is because this is the statistical analysis side of the spectrum here, and this is quite important for us to talk about. Okay, so if you notice, this is our signal line, our spectrum line. Which represents the volatility itself. This is the moving average. We have now started to, I'm going to make this a lot bigger so that you can see what I'm talking about closely. Not only are we're within critical contractive levels here, but we have now made a cross above the moving average line. This is actually a very good sign, you guys. This is what we're looking for. Now, I have measured the iterations to when we have reversed from under this critical point, and out of those iterations, these are the stats right here. So we have a total of 64 iterations, 45 which are correct, and the average upside accuracy is at about 70.31%. We have an averaged upside thrust of 51.46% over the time, over the duration of about the span of 13.34 days. The signal did go off about October 19th, right about here, and we started actually fully contracting right here into critical zones. Now, please keep in mind that BBWP is direction neutral. So only because we have reached contractive levels, contractive extremes, and starting to pivot to the upside does not mean that we're going to move to the upside. For example, in this iteration here, as you can see, we were at extreme expansive levels, critical expansion here. And as we started to contract to the downside, you can see that we actually started gaining some headway to the upside. So please know that BBWP is direction neutral. The reason we include a momentum oscillator down here is so that we can gain a bias in direction. So this being volatility versus momentum, and the current moment, we're looking at an 8-hour chart here. We are on an upward trend on the momentum oscillator and starting to expand. Now, the criteria to meet before we can start actually applying these variables within our statistics is a couple things. We need to make sure to move above the critical percentile, which is above the 10% zone here. We need to move both. We need to move both the spectrum line and the average line above the 10 percentile, and both of them facing up, being having the spectrum line above the moving average and having our stochastics momentum to the upside as well. So we need to make sure that we meet that criteria in order for us to start applying this mean here. So okay, let's look at the notes right here and see what else we got. Okay, now this is potentially starting its expansion phase. So starting the expansion phase alongside testing this descending channel, which is already a trend reversal type signal, and it looks like we're at, let's see, 1, 2, 3 tests of the resistance. Yeah, so if you guys follow me, if you guys watch my videos often, you'll know and you'll recognize that I talk about the golden rule of 3 pretty often. So what I'm looking for is 4 tests or 3 tests, sorry, of the resistance, the formation resistance before another accumulation period followed by some sideways action before another true test and true breakout, being the 4th iteration. Now, in order to validate that we're within the channel in the first place, is the requirement or the criteria for that is just two tests of the resistance, and having a few tests of your support is also important so that we can identify the trend in which we're in. So this is a long-standing, pretty. We've been on it for quite a while now. This is August 23rd. To about now, which is October 25th. So we definitely been in it for a good while, and this could present a pretty good opportunity for the upside, you guys. So I just wanted to mention that our volatility and momentum oscillator are in accordance with us potentially having a testing this for the fourth time and having a true breakout. Now, please notice here that this is let's just make sure that is our EMA 30. Yeah, so this is our 30-day exponential moving average, which has direct confluence with our resistance of our formation here. And if we zoom in just a little bit more, you'll notice that we are also trading above the 10-day simple moving average, the green line, and also trading above the 7-day exponential moving average. And we are currently using it as a support. And now that we're trading above it, we can actually find ourselves being guided to the upside with it. So there's a probability that we can actually start getting these moving averages to start moving above the 30-day exponential and the 50-day simple moving average. All right, so let's look at the notes. Just a sec, guys. Okay, well, let's move on to the next chart and see what we got. Okay, so this is going to be the 4-hour chart. I think we were looking at the 8-hour. So let's look at the 4-hour here, and I have a couple things for us to note, and a few things that we should definitely look out for. So with this Fibonacci retracement tool, we have a resistance at $1.24, which is also confluent with our 50-day simple moving average and our resistance line of the formation. So this is likely a pretty important area here. So we have to definitely break out of that, and breaking out of this would probably signify potential resistance top at the 1.618. This is our golden the golden ratio here. We tend to trade to these levels, and we can potentially use this as a resistance to the 128, and then we can retrace back to start testing our newly converted resistance into support alongside the 50-day simple moving average. As we confirm this new support, we can then move up to the upside. I'm not sure that we can see this just yet, but there is a potential that where we can move to the upside in an impulsive manner to find ourselves at the 2.618, which is at about $1.40, and it has some confluence here with our 100-day simple moving average. So if we take into consideration our 2.618, we can actually do this and draw it right up to the SMA 100, and now we have a resistance range of about 140 to 143, and this is absolutely a super hopium best case scenario here. I don't see this happening so fast. This is definitely within the 4-hour chart, so it would be already a great feat for us to demolish this resistance along with the moving averages and the Fibonacci resistance here. So this is a pretty tough level, and if we do break out of it, since it is a tough level, it's going to serve as a pretty good resistance, and this newly found support here would also have direct rhyming and confluence with our golden the golden ratio, the golden pocket or the golden zone. Typically we would have the 1.786 in between the 1.618, but I don't use the 786 so much. So I usually like to consider the golden pocket to be the 1.272 and the 1.618. So breaking out testing the 1.618, coming back and testing this as support has immediate rhyming with our 1.272 and the 1.618. This is why I'm saying that this is likely to happen within the next days or week. But like I said, anything can invalidate this movement, especially a bad news catalyst, because I'm mostly bullish on SNES. And okay, so let's take a look at these notes to see if we're missing anything. I want to make sure that you get all of the information that I was talking about. All right, so let's move on to the next chart, and this is going to be focusing on the RSI, so we can gain a direction. A bias and direction here. So we're looking at the daily chart, so we can actually apply some weight into the things being said here. So the yellow trend lines drawn here represent bullish divergence. So we have two primary drives of bullish divergence in the daily here, and it looks like this is already starting to play out as a bullish on the bullish case scenario. So since we are in a higher time frame and the bullish divergences have come in, and mind you, these are a bit of since we are crossing this action here, these are a bit of phantom drives of bullish divergence, and one in particular that we do have to keep an eye out for, and this is why we use risk management, you guys. This is why we must take into consideration to open advanced orders instead of just your regular order. Take the time to be able to know your entry, know your stop, and know your exit. But before you do that, understand that I am not a financial advisor. I can't actually suggest for you to buy or sell any asset. Please take whatever I do say in these videos as a form of entertainment, and do your own DD. But we can always speak about these things on the Discord channel or on the Discord server, or on Twitter, or even here. But yeah, anyway, continuing on with the divergences here. So we are facing two bullish divergences that are potentially a bit of phantom drives, and one absolute drive of bearish divergence. So we have the green line showing us it is regular divergence. However, it is phantom since it's going through all of this here. So, and I'm not sure that this small pullback that you see right here could have been this playing out as you know, to the downside. Usually daily divergences have a pretty significant downside to them if they're bearish, of course. So and inversely, if they're bullish, you know, we're looking at primary drives right here, and they are pretty large, and this could potentially send us rocket shipping to the top. We just need to get over a few obstacles. Now, if we come back to this chart here, and we add our averaged moves, we have an upside thrust of 51.46% to the upside. If we add that 51.46%, we can land right at about $1.79, and that has. We looked at this yesterday, but there are several areas where we have used this as a form of support, as a form of resistance. So which makes it a pretty desirable. Like, look at this. This is exactly to it. All of this was support. It'll make it a pretty desirable area for take profit, at least for some longs in this area right here, you guys. So now, if we actually look at, this is one thing for you guys. If we actually look at the 5-day, you'll notice that our top suggestion, which is the averaged upside, the statistical measure, is. It has, in the 5-day measure, it has direct confluence with our 200-day moving average. The 200-day moving average is landing right at $1.78, 1 cent away from our averaged 51.46% move. Now, please, guys, remember that the statistical measures, the metrics that we have come up right here, are not certainties. They are definitely statistical measures. They're statistics for a reason. We get an average mean. So sometimes, you know, all of these iterations, they all measure different pumps. For example, this was a 147 upside. 147% upside, while this one was a 10% upside. So keep those in mind, you guys. We are only using numbers in order for us to gauge potential targets, right? Okay, so now looking on to some more time frames in the RSI. Let's make this a multi-pane window so that we can see everything here, you guys. Let's see. Let's just go ahead and maximize our the RSI here, so that we. Oh, sorry, this is actually the wrong move. We have to go here and here. Okay, so let's start with the immediate short-term time frame. Let's go into the 30-minute RSI. So let's see. Okay, so 30-minute has made a bullish cross above the moving average. The moving average being this pink line, the purple line being the RSI signal line. We have moved above the moving average, and now we are getting critically close to bull strength percentile. Now, I know that for you regular listeners, you know what I'm about to say and what I'm about to describe. I'm sorry about that, but for the new listeners or new viewers, please pay some attention to this as I use references that I will explain here. So this is a regular RSI. We have the 70%, we have the 30% down here. Above the 70 is overbought. Below the 30 is oversold, just like any other RSI, right? So the only difference here is that I have split the RSI into two sections. So this bottom half here is the bearish control zone, and the top half is the bullish control zone. So now both of the zones are split into two as well. So this being bull strength percentile and this being bull weakness percentile. This half of the bearish control zone is the bear weakness percentile, and this bottom half of the bearish control zone is bear strength percentile. So if you hear me talk about that, you'll know what I'm talking about. Anyway, so 30-minute. Like I said, we've moved above the moving average and are getting close to the bull strength percentile here, which is very good. The indicator is suggesting immediate upside. Let's look at a micro time frame. Let's look at the 15-minute. 15-minute looks like it's being rejected by the bull strength percentile. However, we're still within the very deep areas of the bull weakness, which could gravitate us towards the upside. I don't usually go into the 5 minutes too often, but the 5-minute is also suggesting immediate term upside. So let's leave this on the 30-minute and move on to a higher time frame. This is going to be the bi-hourly RSI. So let's excuse me, you guys, let's get rid of this right here. So the bi-hourly RSI has crossed into the bullish control zone. We are trading above the moving average and with an upside pivot. It is suggesting upside, and but just know that when we're in these shallow areas of either the bull weakness percentile or the bear weakness percentile, where you know we can be pulled into these areas and vice versa. So yeah, the bi-hourly is suggesting upside as well. Let's look at the 4-hour. 4-hour RSI, if it decides to load ever today. Okay, 4-hour RSI is not giving us a bias in direction, other than that we're above the moving average, and the moving average is giving us a slight signal towards the upside, and that we are in the shallow areas of the bear weakness percentile, which means that we can, like I've said before in the last few minutes, we can be drawn into the bullish control zone here. Okay, let's move on to a larger term. This is going to be the 6-hour RSI, and the 6-hour RSI is also neutral in direction, and just like the 4-hour, similar situation here. Let's look at the 8-hour. Okay, 8-hour, same situation as the 4 and the 6, no bias in direction. So let's go a little higher and take a look at the daily. So the daily term is okay, so we have now moved above the bear strength percentile. Now we're in bear weakness. Now the dangerous part of this is that we're within the deep areas of the weakness percentile for bears. The moving average is below us, which is bullish, and we do have an upside pivot, which is suggesting upside. Let's look at the bi-daily and see what we got. Bi-daily has now made a cross above the moving average and has jumped into bear weakness, which is very good. Let's look at the 3-day. 3-day is now moving above into the bear weakness percentile, and the moving average is actually still gonna come down a little bit. But okay, so now this is the 5-day, and the 5-day is not really giving us bias and direction either. It just has a slight pivot towards the upside, and I mean we're below the moving average and very close to the bear strength percentile here. So if I were to suggest anything here, you guys, is I don't think I would gain entry into SNES just yet. I honestly, I would like for this. I would actually play this a little more conservative, and I would actually wait for the BBWP versus momentum to start crossing above the critical zone, which is the 10% and above, with both the moving average and the signal line pivoted towards the upside, along with stochastics. And this area here, jumping up to here, would potentially be us already above the newly converted resistance into support of this channel, and starting to use the 30-day exponential moving average as well as the 50-day simple moving average as a trading range, while confirming this new support before a continuation to the upside. But yes, that is honestly my suggestion. I think, well, you know, my mentor told me once that we should not gain entry if we don't have all the criteria meet for the trade. So the best way to make money is to keep the money sometimes, you guys. So that's all for the video, you guys. Please make sure to subscribe to the channel, follow the Twitter account, and join Discord with us. We have a few friends up in there, guys. It's growing, and we can always talk these strategies there as well. If you have any questions, please don't hesitate to reach out to me in any of those platforms. But with that said, I will catch you at the bell. Adios.